Phoenix City, we went out to, I like my daughter's graduation. She did a prize. We really good there.
Yeah.
And they was reading that, and they make sure and then as we go live, when they got their phone, you see it on the screens, so that's pretty cool. They did.
Maybe next year, when we've got a year. To
figure it out?
Yes.
That's what really.
Grading.
I'm gonna hear them all summer.
So we're waiting for the house to start community.
Well, I work out there.
I sit on the football game.
Well,
So it's not here. They try to walk out. I live. Couple blocks to. Junior high.
Yeah.
It's just like, you go here, you play by play, I mean, I get it already, the wind blowing around.
you just let one on the calendar.
Now, with this thing, I won't.
Wow.
Man, and I'm talking. Go sit in Tiger Alley, they get the live stream on the screen, well, you sit there, watch the game on the scoreboard. Tell me the parking lot. All right, so that's, we're gonna get started.
Yeah, they're just trying to get Zoom to start looking right.
You got it? The host is.
It's all.
Yeah, you.
Yes. You activate the screen sharing form.
Yeah. I think we figured out how to do that.
Disabled, but it's.
It's sharing options. Post, share. Try that, Levi.
Okay. Forward going. All right, welcome to the budget workshop for fiscal year 25. First slide is the assumptions. Mr. Gilbert and I already sat down and kind of did an estimate of what we thought was going to happen for the year. So enrollment is budgeted at 3,550. This is a 1.06% decrease over current enrollment. Support units are at 168. Impact aid is budgeted without civilians. No emergency levy budgeted. A 4.11% increase for healthcare. Utilities have increased by 1.5. Utilities have increased by 1.5%.
Did they increase or decrease? And it says decrease.
Sorry, they decreased 1.5%. The building supply will be reduced as enrollment has decreased. And then all staff were given a step and a 3% increase on the salary schedule. Next slide is the financial statement. This is the financial statement I send out every month. The top portion is the balance sheet that has the assets, which is cash in the bank, investments with the state pool, receivables the district will get up to 60 days after year end. Inventory, prepaid expenses, our insurance premium paid out at the beginning of the year. Next is liability. That consists of vendor invoices that are unpaid, salaries payable, taxes payable, benefits payable, and tax revenue the district will receive by August 31st. Bottom of the balance sheet shows the fund balance if we were to close the door at that current month, which I believe that was for April 7th, for April 31st. On the bottom is the income statement. That is revenue, that shows all revenue from all sources. The expenses shows all expenses from all categories. And on the bottom of the income statement shows our financial position. The next slide is the operations. The district staffs employees based on enrollment. The district gets funded based on average daily attendance, also known as ADA. When children are absent, staffing still needs to remain the same. ADA is the most important during the first reporting period, which ends early November. Next slide is the unit support calculations. State Department of Education gives support units based on ADA. There are different attendance divisors based on grade level. Public school support unit table is on the right. This breaks out the state guidelines. A spreadsheet on the top left is included in the handout, but it's an example of how support units are calculated. The ADA numbers that were used are some that I made up for the example. ADA divided by attendance factor equals support units. The table on the bottom left is the allowable staffing. For each support unit, the district gets 0.075 administration, 1.021 instructional, 0.079 pupil service, and 0.375 non-certified. Next slide is the average daily attendance comparison. I made two comparisons of enrollment and ADA. The left is the FY19 versus FY24. This is kind of gives you an example of what it was pre-COVID. And then the right is FY23 versus FY24. Both show a decrease in enrollment and both show a decrease in average daily attendance. This affects support units.
On that, how many support unit difference was it from last year, from 23 to 24?
We were at 189 for 23, and we are protected at 174.98 right now.
Is it the same calculation for 19 as it is for 24?
Yes, I use the same date.
No, but I mean the same, are they still using the same formula?
Yes.
Okay.
Next slide is the salary-based apportionments. First part is entitlement. This is the district-based support. FY24 was 41,391. FY25 entitlement is 43,622. This is an increase of 5.39% over FY24. Of the 43,622, 20,150 is designated to healthcare benefits. This does not cover healthcare costs for the employee portion. Next is administration. Administration-based support is changing this year. Last year was 43,151, and it's increasing to 44,446. This is an increase of 3%. Classified based support is changing this year as well. Last year was 38,802, is increasing to 39,966. That's an increase of 3%. The certified base support is the table on the right. All cells RP1 with AP5 have increased. Average increase is 1.62%. They also added a AP5 cell on that. Next is the foundation payment. The foundation payment sheet is on the right. This breaks out all the state funding in the first half. There's 5 payments that are made per year, and the amounts fluctuate with ADA. Transportation is a line item and is paid out in February for the previous school year. The second half is other state support, also known as special distributions. These funds have specific uses based on Idaho code and are all restricted. Next slide is the apportionment slide. The apportionment computation sheet shows allowable full-time employees and actual full-time employees. Currently certified are 0.54 under the allowance. Classified are 23.84 over allowance, and administration are 1.2 over allowance. It shows what the State Department of Education pays for salaries compared to what the district pays. The district pays $3,188,480 above allowable amounts, plus $654,311 for FICA and PERSE. The district amount will increase when the support units drop. Next slide is Impact Aid. Impact Aid is funded by students with military connections. This includes students whose parents work on non-military federal property. A students have parents with military connection living on base. B students have parents with military connection living off base. And C students have parents working on federal property and living in town. I do not anticipate any funding for C students, and I budgeted Impact Aid at $1.3 million. Next slide is the certified salary schedule. 79.92% of the district budget is made up of salaries and benefits. The table on the left shows the certified salary for FY24. It is based on the career ladder the State Department of Education implemented in prior years. The table on the right shows where the staff are placed. Next slide is benefits. There will be a 4.11% increase in healthcare benefits. PERSE has updated its rates this year. Certified are going to be 13.48%, and classified are going to be 11.96%. The district must pay 21.13% for certified and 19.61% for classified for the district portion of FICA and PERSE above allowable salaries. And then there's no sick leave retirement that is due at this time. But it sounds like we'll start paying again in FY26. Next slide is the purchase services. The purchase services, I compared the FY23 actuals to the FY24 year-to-dates. I ran these back in February. And then I annualized it, basically for an estimate as to what I thought it was going to be at the end of the year. And then compared it to the FY24 budget. This led me to the FY25 budget. So the categories are repairs, which is maintenance for the building and equipment, contract services performed by outside agencies. Big thing with that one is going to be our transportation. Other professional technical services, things like shredding, our cell phone.
Question on the cell phones. Somebody was asking about this, and Eric had asked us to bring it up. Somebody mentioned online, one of their issues with the levy was that they're spending $32,000 on cell phones.
So that's for the year. So basically it's $2,700 a month. I want to say there was a little bit over 50 cell phones for the district.
Okay.
Therapy services are for special needs students. Utilities is going to be power, water, gas. And then travel is going to be travel for athletic competitions, extracurricular activities, and little transportation.
And Trustee Binion, I want to answer a little more on that cell phone issue because Eric had reached out to me about it. And so I think it's important for people to remember that's how business is done in this day and age. We expect people to be available 24 hours a day to a point. There's several people we expect that, and so with that comes a cell phone that's there. But then you think about like our maintenance techs, they all carry a district cell phone because when they're out on the job, we expect them to be reachable, or if there's things they need to contact us on our school sites, our counselors. I mean, it's a pretty extensive list, but it's well within the normal. And I think that anybody in private business would have that same view of it. It's how business is done. It's part of how you operate, so.
The next slide is supplies. Did the same thing with supplies as I did with the purchase services. I compared FY 23 actuals to FY 24 year dates. Then annualized FY 24 year date numbers and compared to the FY 24 budget. This led me to the FY 25 budget numbers. So maintenance is going to be supplies used to maintain the building and equipment. Fuel is for student transportation in district vehicles. Building supplies are supplies associated with each location, including student supplies. Copier supplies are supplies associated with copiers. Textbooks licenses is curriculum and licenses for technology. And other is safety and miscellaneous supplies to operate the district. You'll notice supplies have been reduced in all categories except other. That is because student counts are down and they had to make some cuts on things. Next slide is capital. The capital budget has increased this year from 161,000 to 260,000. Most of the maintenance vehicles are averaging 24 years old. We do have one newer one we purchased this year. We're looking at basically a new truck and scrubbers. I budget $70,000 for the maintenance department. And then adding another white bus to the high school. The goal is to replace existing high mileage white buses. This allows us to haul kids to sporting events and they not have to contract and pay a contract with call the transportation and pay the higher mileage rates. As the athletics is not reimbursed by the state. And then I added 40,000 in capital for athletics. There's multiple areas that need to get updated. Next slide is other. This is our insurance, budgeted at 245,000. So this will cover property insurance, it will cover liability insurance for the district and staff. There's a supplemental insurance for athletics. Allows us to participate in athletic events. And there's also an amount for vandalism and damage or lawsuits. So anytime we have to use our insurance, we have to pay a $5,000 deductible. So that's included in there. So next is the transfers. So federal law requires the district to transfer money to the food service account. And that is to cover FICA and PERS. And then here is the proposed budget for FY 25. It has a revenue under expenditures by $1,404,453. It is under because of the reduction of support units. Any questions?
Just, would you mind sharing your slideshow with us as well?
Yes.
Thank you very much.
I've got one question. ESSER funds. Are they gone now?
So they will be on September 30th. With that, what we've got some existing curriculum and licensing, which is that'll end up eating up.
Everything's been allocated already.
Right, no, I just hadn't mentioned that I knew we were close to them getting gone.
We're just waiting for, basically get billed and be able to pay the bills, and then I can do the reimbursements and have a $0 balance with the state.
What was our ESSER three payout? Do you know?
I think it was 5.3 million for discretionary, but I don't wanna just give out a number. That's something I can email to you.
Levi, how on track are impact aid funds coming in?
They are actually fully caught up.
Fully?
Really?
It's- They made payments for 22 and 23 this year, so.
It's
they're
amazing.
caught up. Yeah, I was surprised.
Mm-hmm.
So Levi, you said that in the assumptions, the levy was just in case it didn't pass. So does that mean that the levy, since it did pass, is going to cover that 1.4 million?
That's a good.
So the decrease in revenue is a result of enrollment decline. So, yeah.
So in the assumption, I talked about the emergency levy, that is something that we could run if there was a need to. What we ran was a supplemental levy. Yeah.
We've won on the emergency levy in years. I'm actually surprised to see our utilities go down considering the whole power was raised at 10% last year.
We, with the east and west getting the new HVAC, it actually, the power went up, but the gas went down. And actually saved money.
Yeah. James, how many support units we looking at losing this year? Based on our knowledge?
Well, so this year is one thing, the real worry is next year. And so what's going on is every district is losing kids. And so the state protects you at a certain level, but you buy into that protection. And typically large districts don't ever have to utilize it. But this year, the large districts are using it, which is causing that buy-in to be higher for everybody. So based on actuals, what did we figure?
So right now, we're protected at almost 175. Our actual numbers are 170. Is what we're actually at right now.
And then it would.
But then next year, the protection drops down. We would be at I think 158 or 159 if we have to use protection based on the 3% cost and the 3%, or it's actually 4% now buy-in. Well, it's being at 170, the budget is 168, in case it would drop down a little bit.
Yeah. So the discussion at the state level is that I'm not real optimistic that the legislature will do something, but big districts are feeling it. And so it's putting a huge burden on all the other districts in it this year. So hopefully this is something, this goes right into the whole enrollment versus ADA discussion. They've got to figure that out, or it's going to be even worse for every district the following year. Like it's going to be a huge hit.
I know that Secretary of Education is trying to rework the formula for enrollment,
Yeah.
but they're still trying to figure out if it's gonna be half day hours, how they're gonna count homeschool kids. That's what they were briefing in November, they were still working on trying to figure how
Yeah,
make and roll was better. Is there anything else for everyone?
I don't.
I don't think we have enough for executive session, just pretty much it.
no,
If there's somebody that you're running late. So. Well, we have a motion with a second, all in favor, signify by aye. Aye. The workshop is hereby adjourned.